What if the single most valuable commodity in the modern economy isn't oil, data, or even AI models? It's your attention.
Likes and follows is currency. If I have 1 million likes, that is currency of some form, right? If I have, 1 million followers, that is another form of currency. There's a value that's represented, except I can't trade that value. It's not real value. It's rented value. It's Instagram saying, you're worth that, as opposed to actually, I'm worth that.
And they control and can turn it off at any
time. And that's what they do all the time. If they don't like you, you're gone.
Every scroll, every swipe, every like, it's quietly packaged and sold by the world's richest companies. You guys know this. They call the platform free, but they cost us everything. Our focus, our privacy, swapped for an algorithmic drip feed designed to keep us hooked while we get nothing in return. That realization sent Yat Siu, the founder of Animoca Brands, on a mission to flip the attention economy on its head. A mission that made him one of the most successful crypto investors and builders in history, and a billionaire in the process. As co-founder and executive chairman of Animoca Brands, Yat has poured billions of dollars across more than 540 Web3 projects, catching many of them before they became crypto unicorns. We're talking about CryptoKitties, remember them? The Sandbox, OpenSea, and Axie Infinity, all long before the rest of the world caught on.
Tokens actually mimic and have the same mimetic pricing information that then tell us in the same way that commodities and stocks do. When there's pricing attention, it informs us about something in the market. It also tells us where we should put our attention and where we should allocate our resources to.
So what makes Yat so good at finding these gems? He's not chasing headlines. He's building the rails for a future where every creator, gamer, and user owns a piece of the network that they fuel, and where the next wave of wealth flows to the communities that generate the hype.
Let's call it outsized opportunity, but it's more risk, of course, because these companies don't have the same attention, but they will when you get that, because the narratives are like, okay, once the sort of first tier does really well, people are going to be looking for the second opportunity and they're going to look for the value plays.
In today's conversation, we crack open the playbook of one of the most successful early stage crypto investors ever. You'll hear how Yat spots narrative shifts before they hit the mainstream, and how you can position yourself to capitalize on the new attention economy he's carving out. So guys, stay tuned. This is Yat Siu, unfiltered, and the revolution he's funding is just getting started.
Yeah, thanks for coming. For those who don't really know the whole story of yourself or Animoca Brands in general, or the Animoca Empire, maybe you could just start off with that. Before we started chatting, you kind of told me some unique kind of features around the way Animoca is structured.
Oh, sure. Well, Animoca Brands is a company that has today over 573 portfolio companies. So we're mostly known as an investor in the space, although we're builders. We're probably known for things like Sandbox or Metaverse or Open Campus, various projects that we've incubated. But I think we really sort of became well known because of our sort of NFT and gaming thesis back in 2017, 2018, backing companies like Axie Infinity and OpenSea, and of course all the gaming areas and NFT marketplaces. But we actually have done a lot of investments in L1 and L2s, everything that helps grow the space. Our mission is delivering digital property rights to the world. That's really what we're all about. We think that's transformative to the world. We're about 1,300 people worldwide, give or take. So we're sort of a reasonably sized organization.
Yeah.
Technically, we have most of our team somewhere between, actually interesting enough, in Hong Kong as well as in Argentina because of Sandbox. But we're a global organization, most recently opened an office here in Dubai. And I started the business in 2011 as a gaming company, right? And we're one of the largest mobile gaming companies at the time, before Apple removed all of our apps because they thought that they didn't like what we're doing. Never really told us the reason. And that was actually our experience, what happens when you basically are under the yoke of a centralized platform that decides everything about you. And in a way, that's kind of when we discovered particularly blockchain and the whole crypto ecosystem. We're like, wait, that's actually a way in which you could have sort of digital freedom, and it's a much better way to build, and that we were super attracted around that. And that's actually why we're really believers in the space. And we started with gaming, but we've expanded a lot since then.
I think that what you touch on is a really interesting point, especially for those of us who come into the space and are builders, and investors like myself. I'm building and investing in things that are helping grow in the space, just like you. But I think for me, I've experienced a lot of these kind of centralized friction points, because I was, playing around Bitcoin in the early days. I've been banned from Western Union, MoneyGram, Bank of America.
Yeah.
every payment rail that possibly could have happened, one after one after one. And then they just rapid fire everyone canceled me after that. And it was a centralized kind of point of failure. And they never give you a real reason.
Yes.
Right? And it's the same thing. Oftentimes, with YouTube or something, they just cancel you like
That's
that,
right. Because they don't like something or they censor you in a way. There's kind of this power, right? It's like this sort of, wise old adage around sort of absolute power corrupts absolutely. And that's exactly what happens. It's not that necessarily they had bad intent when they started off doing it, but then someone somewhere decides, I don't like it, but it's no longer a question of whether this is something, whether it's their decision. It's just really an opinion, and they basically want to censor you for it. And I think the worst part, this is what happened with Apple and also with some of our other experiences. Like, I had some banks also debanked me, even though it was actually American banks in Hong Kong that debanked me because of the fact that I was probably involved in crypto, but they didn't give you the reason.
Uh-huh.
And I think the insidious part isn't that you were removed. It's the fact that because you feel like did something bad happen? Is it maybe shameful? Like what is the reason, right? And the side effect that happened when Apple removed all of our apps without giving a reason, everyone just assumed that we were criminals and we didn't do anything wrong. And someone else suddenly had the power to say, we don't like you. And that's the same about debanking, right? If you're removed from a bank without being given a reason, you've kind of been exercised from society or a certain part of it. And you're suddenly supposed to be in some kind of form of guilt or shame. And like, okay, well, what did I do that's bad? When in reality, actually, you didn't do anything bad. Someone else just decided and made it's, I think, even more than just a moral judgment, just some kind of judgment that was unjust and just removed you. And then people are self-censoring, right? It's like they don't want to talk about the fact that they're in crypto.
Yeah.
Or we didn't tell anyone really that we got deplatformed openly. Everyone knew it, but we wouldn't talk about it. Partially in fear of if we make too much of a fuss, Apple might never let us back in, right? Or if I want to join the financial system and I'm sort of complaining about it, then maybe I'll never get back into the financial system in the traditional way. And maybe I want that. So I'm going to stay quiet. So what you create is a self-censorship, which is, actually even worse.
So you have this friction point, and you and I had them before we really started building, but it was like kind of fuel. And then you have this friction point for a while, right? For you, it said it's 2011, right?
So it happened in 2012.
2012.
Yes.
But still, this is before smart contracts. And so,
exactly.
Even if you had known about Bitcoin back then, you still didn't know that one day you could actually have maybe a decentralized platform to allow these things to happen.
I mean, Ethereum wasn't around then. And the whole thesis around sort of blockchain and really Web3 as a term didn't even exist, right? We really came into that in 2017 with CryptoKitties. So our studio in Vancouver was actually involved in building it. And what was really fascinating was that they shared an office with this other company called Axiom Zen that eventually morphed into what was known as Dapper Labs.
Okay.
And sort of beginnings of later on with NBA Top Shot fame. We became publishers of CryptoKitties. We saw how it broke Ethereum at the time. We were just like, hey, that's kind of interesting. Not because it broke Ethereum, although that was cool too. But it was the demonstration that there was a technology where the supply and demand of these kitties wasn't controlled by a platform, but by the users just breeding them themselves.
Right.
And that was sort of interesting in and of itself. And of course, that they had a digital existence that was permanent. That was also fascinating because in the gaming world, that wasn't possible before. You turn off the database, everything's done, right? The business is not sustainable, you lose all your assets. And losing assets is more than just the money. It's your reputation, it's your history, it's your background, it's your proof that you did it. Like if I could demonstrate that I was a great player in Ultima Online or some of the old games that I played, that's a status. That's like a badge. But we don't have like physical medals or proof for that. We only have a virtual existence that basically is worth nothing if the data point doesn't exist. And now with blockchain, we could do that. So that was really the first entry point into basically blockchain and NFTs.
Yeah. So you said that one of your main goals is to bring digital property rights to the world. So can you double click on that a bit more and elaborate?
Yeah. So, when we look at sort of building on chain and when we think about what's happening in Web3, we think of it as a kind of new nation, sort of like nation building. And it's kind of similar to what, what Balaji talks about the nation, sort of the network nation, network state. But I think a lot of people sort of think of it in that context. Now, what's the foundation of all successful and prosperous nations? It's property rights, right? The nations that have property rights actually have a framework for capitalism, entrepreneurship, and growth, and they all have higher GDPs. And why is that? Because you actually have a foundation of ownership that you can compose and build on top of. The example I often give to people previously in particular was look at the car industry. So the fact that you can own cars and the fact that there are millions of cars out in the world actually created this entirely decentralized ecosystem of service to the cars, right? So meaning that, you had people who were driving the cars. You could have Uber, you could have Lyft, you could have car wash, you could have gas stations. Right? That entire industry was only possible because we all own cars. And the actual sale of the car might hire a certain number of people, but the people servicing and the economy of cars around it was significantly larger. And that's only possible because of property rights, and only possible because I could then transfer the value of that property from one person to another. The basis of most of our wealth is the fact that I own a piece of land, which became my property that I could then sell to someone else, and so on and so on. And of course, the other form of property, and this is the one thing that most people who will say, but it's virtual, it's like I can't touch it.
Right.
Digital property rights, what does it mean? Well, the most valuable property right in the world today is intellectual property right. WIPO estimates that the global IP market is $68 trillion. Okay. Now that's what? That's like 8, 9 times, 10 times gold. I mean, it's big. Okay.
Mm-hmm.
And it's basically based on ideas, whether this is Hollywood, patents, information, IP, trademarks, copyrights. These are all ideas. They're virtual in construct. And I think the US estimated that something like 40% of all jobs in America were entirely IP based.
Yeah.
And if you look at what are the most valuable companies in the world today,
100%.
I mean, whether this is an NVIDIA or an Apple or a Google or you name it, they're all IP based companies.
Yeah.
So we already exist in the world where our virtual property rights are actually the fundamentally most important things that we have. And so we need to extend that in a way that we have more inclusion and broader areas. And that to us is digital property rights, meaning that now I can own my data and the construct of that, what that means in terms of data rights. So there's a new kind of asset class that has now emerged because of tokenization, and that's the network asset. We talk about the network state, but what is the asset class of that network state? It's a network asset which is represented through tokens. It's a way in which we can own a piece of the network effect.
Mm-hmm.
Now, take an example of a social network like Instagram. If Instagram was an economy by itself, which it kind of is, right? The actual value of that network is significantly larger potentially than actually potentially the relative value it is belonging to Facebook as part of the Facebook empire. Now, that's actually what we mean. We have now an ability to own a piece of that network.
Yes.
It's like owning a piece of the GDP or like the economy, right? And you weren't able to do that before until tokenization. And so this is an entirely new network asset class that basically focuses mainly on our attention, and I don't talk about RWAs, right? RWAs are an extension of essentially physical assets for the most part, or existing assets. But network assets are entirely new asset class. And they mimic a lot of things in real life, like our relationships, our connections, but now you basically articulate them in the form of value. And that's what tokenization is all about.
So can you maybe go on with an example of using Instagram, and because the value created on Instagram, if you said it was economy, is created by user-generated content.
Correct.
But they're not receiving any piece of the pie.
Correct. Exactly.
So how does that evolve with digital property rights and where we're going in blockchain?
Yeah. So I mean, first of all, what's the resource of that data of the platform? It's the data you produce, right?
Yeah.
And data is perhaps let's call it the oil, if you will, of the digital world, and we create value from that. Now, before, data wasn't so valuable because we lacked the machinery to make it happen. But the machinery, driven by AI and other things, create these powerful network effects. Now, this data that you create, the content that you create, isn't the content alone. It's actually the networks that they create. For instance, I have great content. I get 100,000 followers. I drive, 1 million page views. Like, these are all forms of attention. Who creates this content? The creator does. And he gets fame and he gets a bunch of likes and he gets follows. And really, likes and follows is currency.
Yeah.
Right. If I have 1 million likes, that is currency of some form. Right. If I have, 1 million followers, that is another form of currency. There's a value that's represented, except I can't trade that value. It's not real value. It's rented value. It's Instagram saying, you're worth that, as opposed to actually, I'm worth that.
And they control and can turn it off at any
time. And that's what they do all the time. If they don't like you, you're gone.
Yeah.
There's a famous story of when Facebook renamed itself to Meta.
Mm-hmm.
The person who owned the Metaverse handle lost it for a moment in time, even though she had it for so long, because he was now impersonating the person who just renamed themselves.
No way.
Yeah. I mean, and there's plenty of examples, like, even with X, right? The person who owned that X handle and at Music Handle. They basically lost it because they renamed themselves to X. It's no different than saying, we are going to take this real estate that you owned for 100 years and just take it, right? Now, under the laws, you can't do that. But, in the digital realm, this idea of digital property rights doesn't exist for Web2 companies. So they can just take it away from you and literally evict you from your property. Doesn't matter if you have 1 million followers. Doesn't matter if you have a lot of sort of value driven from that. Anyway, to that point, you're creating networks. You're bringing in your friends. You're creating value. Now, there is an interesting thing that happens in these network states, which is that the network effects that you have lead into the other areas of your community. So if you bring in 10 million users, actually the rest of the network typically benefits because the user is here for your content, and then he can go to the other areas. And he's actually enriching the network as a whole. But since you don't own a piece of it, because it's not tokenized, you don't have a way of participating in it. And therefore, you're really just renting the platform and giving value. One of the problems that we see in the physical world is, for instance, a relationship that landlords have with restaurants. It's a good example. At least coming from Hong Kong, we have this problem all the time. You're running a restaurant. It does really, really well. You're driving all this attention. Real estate becomes more valuable because people love it. It becomes a hotspot, and then guess what happens? Landlord says, increase the rent, right? And the person eventually gets evicted because they can't afford it. And someone else pays a higher rent.
Wow.
And who wins? The landlord and the person who built it. Sure, they can say, I made some money from it, but it's not long-lasting value. And it's actually something that ends up being quite extractive. And I think we have this sort of landlord problem in Web 2. Now, in Web 3, the tokens represent a way of ownership. So let's say you're building something on Ethereum or on Solana and it does well, or maybe even if it doesn't do well, the tokens that you generated from this activity still become your asset and you grow from the growth of the entire network. It basically is like literally rising tide lifts all boats type of effect. And what's also powerful about Web3 is it's not only your own token economies, like for instance, if it's only on Ethereum. Like for instance, if Solana went to $1,000, right? It's not only Solana that benefits. The entire Web3 ecosystem lifts itself up because liquidity flows around because it's permissionless and interoperable. This doesn't happen in Web 2. If Facebook was doubling in value, it's bad news for everyone else and they would fear it. Whereas here it bleeds into the rest, into the entire ecosystem. So I think it's just a much better open and permissionless system around it. And I think digital property rights is the way in which we also protect and really have digital freedom. Because imagine you own your digital identity and your digital assets, and let's say a platform deplatforms you. All the reputation you build and the credibility around it, you can move along with you. Mm-hmm. It's like if it's your Bitcoin, you can move it with you. And with that proof, you can demonstrate that you have a history and you have value. Whereas, in a centralized platform, they remove it. And now everything you've done is suddenly in doubt because it was never yours to begin with.
What is it going to take? What is it going to take to overcome the incumbents? I mean, that network effect is really hard. You had a well-funded company like DeSo, that tried to launch the decentralized social network, which is exactly what you just talked about. You owning your social graph and be able to take that across different dApps that built into the network and take your currency across it. Beautiful interface. They did account abstraction so well, and it just didn't take off. And I think similarly, a lot of the companies that you mentioned that you guys were known for investing in, a lot of people, that aren't keeping up with them right now will look at it and say, well, Sandbox is dead, right? Or Axie Infinity is dead, or whatever. So I guess that's two-part questions is what would it take for that network effect for this to actually happen? Are we getting there? Is technology getting better?
Yeah, so let me maybe address the second question first in terms of, is it dead? And the answer is it's not dead at all, right? Yeah. It's actually growing. Yeah. In fact, Web3 gaming and what we used to call the Metaverse, or maybe might still call the Open Metaverse, depending how, who you talk to, has now 7 million daily active users, which actually makes it the largest on-chain activity of anything, right? When you think about it. And especially last year, because of Telegram and Ton, you've had a large influx of people coming into Web3 gaming. But token prices haven't done well. And because people are looking at the token prices, and that to me is a broader narrative, we should talk about that afterwards,
sure.
Has given the perception that gaming hasn't done well because price and perception are related. The tokens aren't doing well, therefore the product isn't doing well. Yeah. But, let's still look at these prices. I mean, Axie and Sandbox both have roughly somewhere between the $800 million to $1 billion FTV and trading somewhere between $100 to $200 million a day.
Yeah.
I mean, hey, okay, it's not 20 billion, but like let's be real here, right? These are very healthy economies, very healthy ecosystems. And what people forget is, sure, when you look at the media, you say, oh, Axie is dead and it scammed all those Filipinos. What they're not talking about is how many of those Filipinos became more financially literate, how they were actually banked, because before they didn't even have a bank account. And now they had a crypto wallet and, they would make like $5 or $10, but now they could actually participate in the financial world through crypto rails. And this is the powerful thing that people forget. They may have joined because of money, but then they stayed for their friends and the culture. And this is true for everything, right? And I think this is the part of the challenge that you have when you build an ecosystem. You need to create enough of the social rails that that you continue to be there. So I don't know about the social network that you're talking about, right? But the success of the social network doesn't come from just beautiful functions and interface. I mean, I was an early investor in something called Path, probably the most beautiful social network interface with a really cool idea, which is, from ex-Facebook guys, that we wanted to create a sort of more private social experience, which we understood. And I love that idea. But at the end of the day, if you weren't able to create a social network that pulled you back in, then there was no reason for you to come back in.
Yeah.
A lot of people also don't appreciate that in gaming. Everyone talks about gaming and they talk about the fun and the entertainment and it has to be exciting. But the number 1, number 2 game in the world is Roblox and Minecraft, right? It's not Fortnite. It's not PUBG. It's not the wonderful graphics. It's for social. There's this thing called Bartle's taxonomy, which we use in gaming as a way to determine sort of, what type of gamer type you are. And so we classify them as gamers, achievers, adventurers, and social. Killers are roughly 1%. Those are the psychopaths who just play the game to kill everyone, right? You need them too, but they're basically just there to basically just bully everyone. And then you have the adventurers. They're the guys who really just there, who play adventuring games and they just want to discover, right? That's 10%. And then you have the achievers. The achievers are the ones who are really like wanting to sort of, become number 1 player and level and like they're like driven, competitive, right? That's another 10%. And the roughly 79 to 80%, they're social. Mm-hmm. And what happens is that the achievers and the adventurers bring their friends in, right? They're kind of like the alphas of their particular communities. And they say, hey, you like this? Let me join you, right? Because, if he's a great athlete or if he's a great performer of something, he'll bring in a community, for example. Or if he's a great adventurer, a certain mindset, he brings people in. So they bring people into the gaming ecosystem. And when you go to a game like Roblox and you ask them, why are you playing Roblox? The chances are they'll say, because my friends
are there.
Right?
Yeah.
So that's 80% of why people play gaming. So gaming is the biggest social network that's out there already in terms of interactions, just maybe more fragmented and decentralized. But that's true for everything. Whether there's a social network, whether there's different type of applications, the social glue is actually what holds people together. So I would argue we're kind of already there when it comes to, at least the 7 million daily active users who are there. In the case of Axie, they're now playing Axie not because they're making tons of money, but they're playing there because all their friends and are there and they've got societies and they've got relationships built and maybe some people even got married. You hear all these stories all the time. And that's true for Sandbox. It's true for, Pixels. It's true for other gaming economies in the space as well. But that's, it's because we conflate token prices with utility.
Yeah. So let's talk about that a little bit. You wanted to
Yeah, exactly. So the one thing that we came to realize, something we didn't realize, before, and I think it really sort of became much more obvious when meme coins came around. Right?
Yeah.
And, let's talk about meme coins that are actually truly decentralized, because as we know, there's been a lot of bullshit. Yeah, exactly. So let's take those away. Tokens are actually price information about market indicators in the world. So I look at tokens like an open poly market. Right? In poly market, we make a bet and we decide, okay, yes, no, true, false type of a bet. But tokens are much more indicators of attention and media attention that happens in the world that's out there right now. So meaning that, last year, gaming tokens didn't do well, but we had the highest number of gaming users ever. But actually what did really well was AI tokens.
Yeah.
Right. But the utility of AI tokens is a fraction of gaming, right? Yeah, and remains so. And, we're big investors in AI, but that isn't because we think AI was great that year. We think the AI will grow. What happened? Well, OpenAI, ChatGPT, Perplexity, all these AI conversations, and all the drama with Sam Altman and all that kind of stuff created attention around AI. Mm-hmm. And so AI did well. We had this experience with the Metaverse and gaming.
Yeah.
Sandbox was like crazy. Axie Infinity, like Decentraland, they all part of our portfolio, went like nuts because why? Facebook renamed itself to Meta,
yep.
And COVID happened.
Yeah.
And during COVID, everyone thought we're going to just doing stuff virtual, right? We're not going to travel anymore. And what happened to Zoom stock? Mm-hmm. What happened to Peloton? Mm-hmm. Like all those companies were doing incredibly well, and therefore all of the tokens did incredibly well as well. So that was a setup. So that came to our conclusion that tokens actually mimic and have the same mimetic pricing information that then tell us in the same way that commodities and stocks do when there's pricing attention, it informs us about something in the market. It also tells us where we should put our attention and where we should allocate our resources to, right? So that's the broader thesis, right? And that's also, by the way, why for a moment in time I was kind of cool with my kids, because I was able to talk about Chill Guy. And I didn't know anything about Chill Guy because I'm not on TikTok. I just knew about Chill Guy because, there was a meme coin that was kind of scandalous and people were arguing about it. I was like, what's this? Right? And again, where was the attention? What did people care about? Chill Guy at that moment in time, token was flying. And, a token can have attention for 5 minutes, for 50 minutes, for 5 years, right? But it has attention and it's that mimetic quality. So why do we think gaming will be bullish this year? For the same reason. Meaning people don't realize, who is not in an industry, that gaming has been flat to declining for the last 3 years. So meaning that the gaming token decline globally,
non-Web3, just in general, right?
Globally, right?
Yeah.
So gaming has had a horrible run. In fact, the growth area of gaming, ironically, has been Web3. The rest of the gaming industry has been declining. So everyone thought, after COVID, gaming will up to the right.
Mm-hmm.
More people are going to play games, they're all going to be virtual, all that kind of stuff. Didn't happen. Not only did it not happen, it slightly declined. Why? Declining birth rates in the developing economies. Less babies in Japan, in America, in Europe, all that kind of stuff. So you have a macro issue coupled with the fact, and this is what most people really don't understand, gaming is the cheapest form of entertainment in the world today and hasn't had price inflation for 10 to 15 years. So it costs the same to buy a game today than it cost 10 to 15 years ago. Now, what happened in the world? We had inflation of capital, labor costs have gone up, milk costs more, everything costs more, but games cost the same. So
or cheaper, right? Or free.
Well,
sometimes.
I mean, yes. So that's the business model, right? But the point is that the price you charge, the average revenue, hasn't increased per user because they haven't increased the prices.
Mm-hmm.
So that means that in broad money terms, gaming companies are making less revenue in real money terms. Therefore, they had to lay off people. Venture capital became very pessimistic about games. It became sort of hit driven, and we also became only focused on the sort of next sequel of the titles. Gamers were like, okay, there's nothing new and exciting. And so we've actually had a declining industry. And that's the narrative that most people aren't sharing when you're in the gaming industry, because it's obviously not a sexy one, but that's the truth. And that's totally reflected in token prices and also in share prices, by the way, right? All gaming stocks haven't really performed as well as they should, given their massive sizes. I mean, Roblox, despite it being the number one game in the world and having, I think, something like 380 million users, I mean, like crazy numbers.
Wow.
Trades at, I think it's a $40-50 billion market cap. Not bad. But, if you're a social network with that kind of user numbers, you would be trading at 10 or 20 times that, right?
Yeah.
So it's all based around that mimetic narrative that gaming is kind of down and it's not doing so well. But we have 3 major things happening this year that will change gaming. And this is why we believe very much in this thesis. 1, Nintendo Switch. 2 is launching this summer. It's already sold out in pre-sales. This is a console that's selling for almost $500. That's a record price for that thing. So there are people already paying more for the hardware. Second thing, they're charging $80 for the digital and $90 for a physical copy of Mario Kart. Now, just in context, it will cost you normally $60 to $70 to buy a game. That's already at the premium end. So that's like a huge price increase. And if they succeed, which we think they will, then everyone else is licensed to increase the price. That means we're going to have inflation adjustment, more revenue, more growth. And every time someone buys a console, something between 12 to 15 new titles are being bought over the lifetime of the console. So, right, because you're not buying a console just for one game.
No.
You're going to sort of increase that. So that's really positive. But the bigger one is Grand Theft Auto. Now, do you play games?
I used to a lot, but not so much anymore. But I've heard a lot of anticipation, right?
Yes, exactly. GTA 6 is probably the most anticipated game in the history of games. It hasn't had a release since 8 years. And more importantly, most people, as I had shared earlier, didn't have a reason to buy a new console because they're like, my old console's fine. I can play my games. Quality graphics is good enough. But to play GTA 6, you have to buy a new console. And they're going to do that. And so again, similar thing. Plus, there's a rumor that they're going to try to charge $100 copy per game. Even if they charge $90, it's going to be amazing. So you have these macro, this sort of mimetic nature where everyone's going to talk about games. Everyone's going to be excited about it. Nobody else is going to be talking about anything else by the end of the year. And I think it's going to bleed over into basically the tokens, which are mostly going to be the majors and some of the value plays, right? So because a lot of these gaming companies that we're investors in, of our 573 portfolios, over 165 are in games. A number of them are profitable. They're sustainable as a business in themselves. It's just not reflected in the token, right? And so these are examples where I think these companies are going to end up doing quite well. And the other thing is that, and this is important to note because the US doesn't yet have clarity what is a utility token and what is a security.
Yes.
But they're going to do that. And it's very clear now that under this administration, meme coins are collectibles, or whatever you want to call it, meaning that there is not going to be an issue to allow tokenization inside games. Now, do not expect Take-Two, which is the owner of Rockstar Games, really, but Take-Two, to launch a token. However, GTA 6 allows you to run your own servers. And so our expectation is that these RP servers on GTA, individuals are able to run their own crypto rails. So in the same way that you might have meme coins launch, you might end up having tokens launch inside certain servers. Whether they do well or not, they're going to be a kind of onboarding. They're going to bring people into the ecosystem.
Interesting.
And before, if you're a game company, especially if you're public, you would immediately say no because you don't want to get the ire of the SEC. But now you kind of have a more laissez-faire attitude. You don't have to endorse it, but you also don't have to shut it down. And we think that's going to happen more and more. And I also think that once the US clarifies what is actually a utility token, because we're still waiting for that, right? Then it gives permission for the big game companies to say, okay, now we have a pathway. Because before, why should they take a chance? Like, we as an industry are so used to living on the edge that we're like, okay, this is what a guy said. We heard a rumor. Let's do something, right?
Yeah.
Like, we completely sort of are happy to sort of live on the edge. But, if you're a large corporation, you're not going to take that risk. You need clarity. And when that clarity comes, I think you're going to get a lot of adoption.
I'm happy to hear this because I think, 2021 gaming was a pretty big meta, right? Mm-hmm. And then, it's completely been quiet ever since then. And one of the things I always try to talk to my audience about is, go find the value plays right now because you have, like you said, games that are making profit, have users. No one's really talking about them. So you must have this crazy discounted value likely, that especially if they're making profit. And then once the meta comes back and altcoin season comes back, you have unbelievable opportunities out there. How does one go about finding the games? Because just really no one's talking about it. And then the majors, you've got, I don't even know what, you've got Gunzilla and I don't know if I don't even know if Illuvium is still out there. Or I don't know.
So I would generally look at, the majors in terms of, I would categorize them really into maybe let's call them 3 buckets, right? Okay. So the first bucket would be the majors, which is based really on liquidity. And as I shared earlier, the view to me is it's about the mimetic quality of the token. In other words, if you're thinking, I want gaming, what are the tokens you're immediately going to think about? Right? What are the tokens you're associating right away? And we're investors in Gunzilla and we're very supportive of them. And, because they're listed on Binance and they have liquidity, that could be one of them. But I think the OGs are in that first category. So Axie Infinity, Ronin, Immutable, Sandbox, right? The ones that you associate with different layers of them is kind of one bucket, right? So that's kind of, let's call it a gaming OG bucket.
Okay.
That, because they're on perps everywhere, they're trading high volumes. At the end of the day, Sand, Axie, and Ronin, they trade lots, right? And so that means if you are worried about something and you have to get out, you can get out very quickly, right? You don't have to worry about that. So
we see the same. We see the same thing in every cycle with the majors that have ran like layer ones, for example.
Exactly.
You can go buy Avalanche today. If all season comes, it's probably going to do pretty well.
Exactly, right?
Regardless, right?
Exactly. Yeah. So you've got kind of one, and of course then you have the ones that are attached to it, right? For instance, if you're known as a gaming chain or if you're known as a gaming ecosystem, they'll sort of benefit from that halo. Like in our case, it would be Mochaverse because of Animoca's involvement. Or it would be Ronin or Immutable because they're chains that have games on them. And so they think, hey, this would do well as well. Because who has the gaming mindshare, good or bad, right? And so that's kind of one play. And there's a basket of them, let's call them, maybe 10, 12 that you want to sort of distribute around as sort of having let's call it your sort of gaming majors. Not in terms of utility. I'm talking more in terms of token mindshare and liquidity, right? And then you have the second basket. These are the ones that I talk about that are actually profitable. These are companies that are making money, but they have crushed market caps, and they're not necessarily even on the major exchanges, right? They might be on good exchanges, but they're not going to be on Binance or on Coinbase just yet. Those companies have an interesting narrative because if you remember what happened with AI tokens, many of the major AI tokens that did well were not listed on the majors, right? They were on DEXs and elsewhere, but they were trading like they were, right?
Yeah.
And so that's actually the more, let's call it outsized opportunity, but it's more risk, of course, because these companies, don't have the same attention, but they will when you get that, because the narratives are like, okay, once the sort of first tier does really well, people are going to be looking for the second opportunity, and they're going to look for the value plays. And that's basically where that particular category goes. And then you have the third.
You don't have to pick favorites or anything like that, but just a few examples so people understand that kind of category.
Yeah. I mean, there's several categories there, but I would say, there's, for instance, I'll name two examples, which are also part of our portfolio. So full disclosure here, right?
Yeah.
So one of them is Gamey, right? Gamey is hyper casual, has 3-4 million active players, right? It's very Telegram heavy. Token has been obviously not doing well. 3 or 4 million
active players.
Yes, 3 to 4 million active players, right?
It's mind blowing because I don't follow gaming so closely.
Yeah.
And if you would have just asked me before we came in today, you said, Kyle, is there 1 million active players on Web3 right now? I would have said no, because you always hear people say, there's 12 daily players in Decentraland or something like that.
Yes, yeah, but the point is, when I say majors, is that because Decentraland has the token attention. So when you look at a token today, and this is, I think, true for most tokens, the utility is maybe 20% and the speculative quality is 80%, right? And so, but the person who's speculating isn't playing the game.
No.
Right? He's just like, what's the meta, right?
Yeah.
So that's why you have this dislocation, because they are not looking at what's happening. But if you look at it, so Gamey in particular has had this sort of dislocation because not only is it a game, it's also a game on Telegram, right? And first, we're big supporters of Ton. We're the largest validator. We have a sizable amount that we really want Ton to succeed. However, because of the last year's cycle and because of all the botting, a lot of sort of investors are like, oh, Telegram, is it a real user? Mm-hmm. And they are, but because so many of them have been botted, they've had this negative flavor, right? And so you have one company that's basically dealing with the double negative meta. And so therefore, it's not just the fact that they're in gaming, it's also the fact that it's gaming on Telegram, right? And that's where they go, oh, okay, that doesn't look so good for now, right? But again, that's one we like. And then there's one that are more, but it's hyper casual. And then you have another game, something like Cross the Ages, for instance. Mm-hmm. Right? Cross the Ages is a very high quality game. It is listed on things like Bybit, for instance. It's a kind of game that actually has sort of solid gameplay, makes revenue in a Web 2 type of way. However, again, token is completely crushed. I mean, it's crushed. It's completely crushed.
I invested in it.
Yeah, exactly. But it's actually a very solid game. And that's, for instance, one of the types that we would say, you know what, we like this. It's a good game. And this is something that we think we can support over the longer term because fundamentally a strong team. And if the gaming meta comes back, then you get all the swing of the sort of capital and speculative side coming into it, which is basically zero right now, right? So those are some examples. There's many more, that we see. And, we're taking positions on this. We think this is something that we believe in will happen at the end of the year. And then there's a third category, which is less likely for others to participate in it. It's more like, what are the great games that are coming out that we should be backing? So you have things like, from the creators of EVE Online, right? Yeah. Or you've got, for instance, Clang, you've got really, really big AAA kind of Gonzilla-like games, but in different categories coming out. And, to Gonzilla's point, it's a wonderful game. Off the grid is great. I just think the timing was wrong, right? In terms of the meta.
Yeah.
But that makes an opportunity for other people to get in if they wanted to.
I think it's like for me, it's, I said if you probably could buy one thing, just because I'm just so close to Vlad, I know the story so well and what they're doing. Yeah. But, to get it right now, I think at what we could, I think it's fair to value it at least for the next 11 months at the current circulating market cap, which is like $30 million. Are you crazy? And then you have no unlocks for 12 months. I think, the second gaming clicks off, that thing's just going to skyrocket.
Yeah. So I think it's true for a whole series of things. But I would still view Gonzilla in the second bucket only because it's newer.
Yeah.
But of course, because it's listed on Binance and other things, it obviously has that opportunity somewhere between 1 and 2. Either way, I think there's opportunity. And, these aren't things that you have to sort of throw your life savings in. Please, buyer beware, all that kind of stuff, and NFA. However, that's certainly what we're doing, and that's certainly our belief. And, again, this is not because Web3 gaming is taking off only. It's already taking off in terms of user numbers. It's because the narrative on gaming is broadly going to get better by the end of the year for these factors. Of course, if Nintendo Switch 2 doesn't sell well, and if GTA was a flop, it's not going to happen. But we think that's unlikely.
Okay, so forward looking.
Yeah.
what kind of meta or is there any new kind of meta evolving that you think is interesting that you guys are kind of starting to look at, besides gaming? Or?
Yeah, besides gaming and of course AI and DeepIn and everything else that, we've been looking at, the one area that nobody's talking about that we love a lot is education.
Yeah.
Now, education is a $5 trillion market. It's kind of boring. That's why everyone's like, what's going on here? And most recently we announced an investment, in Pencil Finance, which is basically DeFi student loans.
It's very cool.
Now, that's really cool. But let me just explain exactly. We put in $10 million to provide student loans in places like Philippines, Indonesia, in India in the future. It's like $500 loans. Those students are paying 17 to 30% interest. Crazy. But what does crypto do? Cheaper, better, faster, right? So better yields. Basically,
they were paying not on Pencil.
No,
right?
no.
Yeah.
But they
so
were
you're
paying.
disrupting that.
You're disrupting that because you get better yields, which means that as a result, you pay less interest and you get higher yield for the person who's providing the capital.
Create a free market.
Exactly. You create a free market and eventually you can even tokenize those student loans. So that's the thing. They also get a wallet. And when they get a wallet, they're onboarded to Web3.
Yeah.
And we're talking about millions of students. I think there's 100 million students plus in the world that have student loans,
and
right?
You can offer all kinds of financial services after that.
Exactly. Also, just airdrops. You're a student. You have time. You're going to play a game. You're going to do an activity, right? Airdrops in the last 4 years basically generated $48 billion in value. Some of that can go to students to help pay off the loan and do other stuff. It's a great way to educate people around the space. But I think the other thing really what's big is that we want to bring student loans on chain because it's better, faster, cheaper.
Yeah. And
the size of the student loan market is $3 trillion. Now, if you take 10% of that and put it on chain, that basically quadruples our TVL today. So people are like, oh, $100 billion, TVL on DeFi, that's wonderful. And, we can grow from there. But a segment like student loans and bringing them on chain will blow everything out of the water. And then what happens? People start building other DeFi primitives and other sort of composability and other products on top of it. And that actually, we think, will be the engine of real growth in the space.
I love those kind of products too. I think that decentralized insurance was something that Nexus Mutual came along. Mm-hmm. It didn't really take off so much, but I think because that was once a narrative and then kind of came down and never became popular again, is something that still is kind of ripe for disruption. Anytime that you have these kind of centralized entities taking advantage and charging these really high interest rates, and you can open up a free market for that. It's the perfect use case for blockchain.
And I think the other thing also is that it's a narrative that you can tell your grandma.
Yeah.
Right.
Totally.
Meme coins, gaming, DeFi, all great.
Yeah.
But, either they don't understand or they go, that sounds kind of scammy or whatever, even though it's not necessarily. But hey, you're giving loans for students to further education. Everyone can get behind that. And I think those are the narratives and the stories we need to keep telling. Because it's not just about making more money, right? The space is much more inclusive than that. We have to show also how we can actually share more of that value and share in it together so we can create a better ecosystem overall.
Cool. Last question. Bitcoin price prediction and when alt season?
Yes. So first, Bitcoin price prediction. I think by the end of the year, 150, maybe 200,000, right?
Okay.
I would say that I would have said probably 200,000 if it wasn't for what happened in Q1. And I'm like, what's going on here? But I think Bitcoin general adoption from an institutional side point is kind of a given. So it's only a matter of time. So I do expect that to accelerate. When Bitcoin rises, generally alts rise as a whole. But I think gaming is going to be driving, for the thesis I explained, the sort of altcoin season in many ways, and which will basically have an underlying effect, kind of in the same way that we've seen back in 21, 22, but more distributed. So, don't expect maybe things to go up like, maybe 20, 30x like the way they did it. Because remember, in 21 and 22, there was only a handful of gaming tokens, right? Now we have many more, right? So as a result, we should see more distribution, but overall it should be up. And also expect that meme coins are trying to hunt for utility, right? Which means that you should expect some of the bigger meme coins to start launching their own games or launching their own sort of maybe chains of some sort to basically demonstrate that they're more than just a meme coin because they need to stay relevant. And I think that's what's going to happen somewhere between the end of the year to next year.
Cool. Yeah, thanks so much.
Thank you for having me.
Yeah.